Hello, I'm Lisa Lacqua. Welcome back to my channel where I am committed to voice and visibility, wisdom and wealth for women in their 40s, 50s, and 60s. If you're here today for the first time, welcome. Please hit the subscribe button, comment, and like, which helps the algorithm. Today's video, in today's Learning with Lisa video, I'm going to tell you some of the questions I'm asking when I think about investing in real estate syndications. I'm also going to talk about what a real estate syndication is and why I think it's important. As always, I'm taking you on my learning journey. I'm a lifelong learner. I'm guessing you may be too. So I'm not sharing anything from a place of expertise, but rather bringing you along on my journey of having an impactful and fulfilling, successful life as a woman over 50 as part of my artful aging philosophy and approach. So today, I'm going to be covering what a real estate syndication is, as I understand it, and some of the questions that I'm thinking about, remembering to ask when I consider various investments, and some of the things I think you should too. This is not expertise content. This is my journey, sharing with you my learning. Everything in this video is for educational or entertainment purposes. So do your own research, check with your professionals, the people who support you, your accountants, your attorneys, and all the people. So what is a real estate syndicate? You probably know what it means to invest in real estate. Maybe that means you're out looking for an appropriate single family dwelling for yourself, and maybe you're going to house hack it, which even people at our age can do. I personally believe, brief aside here, that there is going to be a growing market for people living in community. I believe there's going to be a radical change in the way we live going forward, and many opportunities for people to create community living spaces. And so as people change the way they live, and fewer of us live in traditional single family homes with a nuclear family, the more we want to create our own communities, especially for many of us after 40 who've possibly raised our families, gone through a divorce, might be single, and changing the way that we live our life in general. I think there's going to be a new way of living for many of us. And it's inspired by people who are living in communities because they can't afford otherwise. Maybe our motivation is going to be different. Maybe our motivation is going to be connection and all of the economies of scale that come from living in groups, including cooking together, financial considerations, and other. Brief aside, real estate syndicate. You may have already invested in real estate in a primary residence. You might even have invested in real estate as a pure investment, whether it is in a duplex or an individual home or a second home that you rent out for short-term rentals on Airbnb or Vrbo, or for a long-term rental that you have rented out full-time throughout the year. Real estate syndication is a different way of investing, and in some ways more passive. You have less involvement and less of an active role in the finding, securing, and managing of the investment itself. So the way a real estate syndication works is one part of the equation, who we'll call either a sponsor or the general partner, the person who is the syndicator, finds a deal, finds a situation that they think has a lot of growth potential or is a great investment for one reason or another. Hopefully they have some expertise in that general asset class and have a good idea of why they think it's going to grow in value and why they think it's a good investment. They take this deal, put this deal together, and then they ask for and find people who are investors or limited partners, partners that bring money into it for participation in the deal. So in the simplest of forms, a real estate syndicate is when people and companies and organizations pool their money to invest in a real estate deal of some asset type, do some kind of capital or situational improvement in order to raise the value, while also giving back money to the people who invest in it. Okay, so simplifying this, there are two parts. One side is the syndicator. That's the person who runs the deal, who finds the deal, who makes it all happen, who manages it. They're considered a managing or general partner. On the other end are the people who participate in making sure that deal happens, who contribute to the deal financially, who pool their resources to make it happen. And these people are generally known as limited partners or investors. Those people put their money in, they play a limited role, if any role, in the managing or operations of the event. In fact, pretty much they play no role, which is why it's a passive investment. And hopefully in a good deal that goes well, money is made in the process of managing the investment, and money is made on the other end when that asset is sold. So I want to take you through some of the questions. Again, I am sharing my learning with you. I am taking you on my journey as someone who is exploring and learning about real estate syndications, real estate investing in real estate syndications. You need to do your own research. And if you have ideas, if something I say doesn't ring right, or you think I need to be thinking about something else, please drop it in the comments so we can all learn together. Some of the questions that I am learning to ask as I consider various real estate syndication deals are as follows. I'm going to walk you through some of the questions. The first question to be asked is, what is the deal? If I come into a syndication as an investor, what's the minimum investment I need to bring? Usually I've found it's around $50,000, and can be sometimes split between different types of investment styles or different layers of the investment. I want to know what percentage I'm going to get back on a monthly basis for that investment, and what type of investor I need to be or how I need to participate in order to also benefit from the upside. That means when the asset is sold. That brings us to the second question I need to know, and that is, how long is the sales cycle? What is the projected length of the investment? From the time the syndicator chooses the property, invests in it, purchases it, acquires the property, does whatever improvements or changes are going to happen over the cycle of the investment, and then the asset is sold, what is that projected length of time? I'm finding that 5 years seems to be pretty common. Sometimes it's a little bit longer, but 5 years seems to be coming up quite often. Then I want to know who these general partners are, who the sponsor is, what kind of track record they have. Some of the questions I'm learning to ask in that vein is, how many deals have you done? How long have you been syndicating real estate deals? How many cycles have you been through? That means a full cycle is from the time that you raise the money, purchase the property, do whatever improvements are, and then sell it. That would be one full cycle. So I want to ask, how many full cycles have you been through, or have you taken a project through? And then the final question I'd ask in this vein is, how many repeat investors do you have? Assuming the syndicator, the general partner has, or the sponsor has done more than one deal, the next question is how many people have come back? They should be able to tell you what kind of repeat participation they have in terms of their investors. Then I want to ask the sponsor, the syndicator, the general partner, what is your assumption? On what basis are you making this investment? Why do you think this is a good deal for me? And why are you putting your money into it? Because generally, not always, but a lot of times the syndicators will say, we have X amount of money as the managers going into the deal ourselves, to show that they're committed to it, to show that they have skin in the game, and hopefully because they think it's a good investment and they want to benefit from the value of it. So the next question I want to ask is, why do you think this is a good investment? In some cases, the assumption is, if we buy a property in this particular area, we believe this area has a lot of growth potential because of the number of people who are starting to move there, because of the type of business growth that's happening there, because of the increase in the wealth or income levels in that area. That might be one reason, that they believe that that particular geographic location is an up and coming location. The second possibility is they may see an opportunity for increasing the value of a property. So for example, if they wanted to buy a group of houses or multifamily units in one apartment building complex, they may decide that if they do A, B, or C, maybe it's painting, adding appliances, somehow upgrading the property, that they can increase the rents, thereby increasing the value of the property over the course of the cycle of the project, at the end of which they will sell it. So what's their assumption? Why do they believe this is good in terms of the geographical location, or their intention in making changes that should create value? The next question that I would want to know from the syndicator, from the person who is running the property, running the investment, is the other thing I'd want to know about the investment return is, what is the capital stack? Now, I'm not going to go into a lot of detail about capital stack, because to tell you the truth, I'm just starting to understand it myself. But capital stack means the layers of participants in the project, the layers of investors. Everyone comes in the project in a different way, at a different level, with different limitations, different amounts, different responsibilities. And each of those people or layers of people are paid back at different times, and first, second, third, fourth. So the capital stack is the layers of people who are participating in the project, and how much risk they are experiencing from their investment, and how quickly they are on the list to be paid back first. Obviously, the people with more risk are the people at the end, the people who are paid back last. That tends to be the general partners, the people who are bringing their money into it. And even inside of that group of people, of general investors, there are layers. Like there might be Class A or Class B general partners, or sorry, limited partners, who get paid at different times and have different upsides and different levels of monthly interest rates. So I want to know what the process is for returning the capital, for the roles that are being played in terms of bringing the capital to the table. And again, as I learn more about that, I'll probably do another video on what it means to understand the capital stack in a real estate syndication. Going a little deeper into that, however, what I've found so far when I've been researching various deals is that as a limited partner, someone who's wanting to bring money and participate passively in a real estate syndication, that there are generally two types of investor types available to me. And that is a general limited partner Series A, a limited partner A and limited partner B. Generally, the A class of investors gets a percentage back, an annualized percentage interest, an annualized interest rate paid back on the initial investment at somewhere between 7 and 11%. Often I've seen it around 9%, that they get paid back on a monthly basis for their capital. The second type of shares are B shares. B shares seem to be a situation in which you bring money for a lower monthly interest payback based on an annualized amount of generally somewhere between 4 and 7%. I've seen 5, 6% being fairly common, that you get back monthly, but you also get a percentage of the upside on the sale of the property. That asset class, or that share class, tends to be a little bit more risky because you're not getting your money back until the end, and you get paid after everyone else, but there's more potential for upside. So that's a riskier type of investment compared with the limited partnership investment in an A shares in a real estate syndication. Other questions you want to ask the general partner, syndicator, or sponsor, whichever word you might be using, whichever word might be appropriate. And if you have some insight for me on how I can make distinctions between those, like everything else, if there's learning to be had, please drop it in the comments. You want to ask the sponsor of the deal, what are the biggest risks that could happen in this investment? I understand why you are seeing this as a good investment, but what's the worst case scenario and what would happen should that occur? You also want to ask the syndicator what happens if they are unable to make the returns that they've promised to the investors of the A shares and the B shares, as well as everyone else. But because I'm looking at this from the perspective of a limited partner, someone coming in with the A or the B shares, instead of the higher up people who are putting more money in up front, my questions are, what happens if in the capital stack, you run out of money and the people in the lower end of the stack, i.e. the limited partners in the A and the B shares. What happens if you run out of cash flow or you have cash flow problems? What are you planning to do should I be in that situation where the returns as promised are not coming to me? And then finally, you want to ask about taxes. This is another area that I need to go a little deeper in to get next level understanding. But investing in real estate appears to have not only benefits on a cash flow basis in terms of the interest, not only upside potential in terms of getting money when the project is complete, but also some benefits to the investors from the perspective of tax savings related to depreciation of the property. I don't really understand how that works yet, so stay tuned. Come on back as I learn more. If you have information, you want to point to it, share it in the comments. The final question, another question I want to know is, what is the exiting issue? Am I committed for the full cycle? What happens if life occurs and I need to take my money out? Is there a way that I can sell my position in the project, or am I stuck? Is there a fee? What's the exit, or what's the liquidity of my investment? And then finally, I want to know that my philosophy is aligned with the investment philosophy of the sponsorship team, of the general partners who are making the investment, who are managing the project. Also, in some cases, there are syndicators who have a vision for something larger. For example, I'm constantly looking for syndicators who are improving the real estate experience as either tenants or as potential future investors themselves for women and people with marginalized identities. And there are some syndicators who have that as part of their vision, and I'm always looking for those kinds of groups. I like to invest in groups that involve women as part of their management team. And so I'm interested in the underlying philosophy, vision, and impact that an investing team is intending to have. I hope that's been useful for you. If you have any insight, please put it in the comments. If you have any questions that I haven't mentioned that you like to ask when you're considering real estate syndication investments. Or if you have any questions that I might be able to either research or answer, put that in the comments too. If this has been useful for you, please like, comment, share, subscribe, all the things, and I'll see you again next time.